Every exit that I tracked beat my numbers, which told me right away that whatever exit I picked and stuck with it consistently would beat what I was doing.
Can you talk about how you're able to take so many losses and just be totally fine?
I'll keep my mind focused on not trying to look for something and be looking for. Because here's what happens. I'll find something if I look in the stocks that have less liquidity that I shouldn't be trading. And then I'll say, what if I was looking and I saw this and I could have made money? And 9 times out of 10, it's a losing trade.
When does it come to a point where you're like, you know what? I have to look for something else. Welcome back to the show, everyone. Today is going to be a great day because I brought my friend and trader Jay-Z back to the show because he's been experiencing a market of change, to say the very least. He focuses primarily on the OTC markets, been trading full-time for 20 years. And OTCs, as you know, if you are trading today in 2024, you probably are aware that they are changing dramatically. And so I wanted to bring Jay here to explain how he's dealing with this change. So Jay, welcome back to the show, my man.
Thanks, Alex. Thanks for having me.
Absolutely, man. So I know you and I do talk on a regular basis,
Yep.
which is so fun. I love meeting new traders. I think it's super important. But I want to know what has changed and what have you seen change, and kind of take us from like 2019 at the beginning of change and take us to now.
Okay, so 2019, there's always a lot of changes in the OTC market where there's usually a few months that are hot and then the rest of the time is not. But in 2020, we know COVID, 2020, 2021, so everything went crazy.
Yep.
But I'd say from the time that I started to 2019, I'd say it was pretty steady, even though there were hotter times than others.
Yeah.
But 22, things really changed. It actually happened at the end of 21, but it didn't affect my trading. And what happened was the regulations changed. So a lot of stocks went away. A lot of stocks that weren't reporting, they had a deadline to meet. And if they weren't current on their filings, they're gone. So a lot of stocks disappeared because of that, because they're not going to pay, because it costs money to report. So they just disappeared. So that made the pool smaller. In addition to that, they started cracking down a lot more. Today, actually, I think the symbol's NRHI, and it's been creeping up. Perfect play that I would have loved to take back in the day, but because of the regulations now, I won't touch it. It started at about $1. Over the last couple of weeks, it went, I think it was at about 10 or 11. Yeah, just creeping
steady,
every day,
every day.
The problem is today I noticed it opened up around $1 from 10. So this is the difference. So that basically, that happened because they used to call it skull and bones, now they call it caveat emptor. And once they label it that way, it's gonna open up probably 90% down. Yeah, and this is the issue. They didn't crack down like they are now, back in the day as much. And so there's a lot of promoters that, are gone. A lot of people are afraid to get involved.
And promoter, for those who are not aware, are the people who pretty much promoted stocks.
Yeah.
OTCs weren't really regulated.
That's
and
right.
So they promoted the heck out of them, either with mailers back in the day, text messages and so forth, social media to pump stocks and get volume. But that's cracked down on.
Yeah. It used to really be the wild, wild west, and they've cleaned it up a lot, which is not good for traders.
Right, especially for the ones who focus on the OTC world.
Yeah.
So with all the regulations, do you see less? I know. Okay, so I know a little bit behind the scenes because I do talk to you on a regular basis. So I'm trying to get to this. I would love for you to share what's really amazing is the volume.
Yeah.
Because you would think, and you've showed this to me, you would think just with all the regulations, there's going to be less companies, that the volume would be way less overall in the OTC world. But you have found what?
Yeah, it's actually not.
Isn't that crazy?
I can't make sense of it. Although probably a lot of that volume is foreign stocks, Canadian ones. So that might explain some of it, but still it really doesn't make sense. Because it's like the activity is there. The volume is there, but what's interesting are the amount of trades aren't there. And in the OTC market, the amount of trades really matter. So that's important because that's really the liquidity in the OTC market. So you could have a lot of volume and 10 trades for the day. you don't want to trade that stock. That could be two people trading back and forth.
Yep.
So so the number of trades has decreased dramatically.
Oh, so that did decrease.
The number of trades, but the volume, so that's the balancing
So the
act.
truth, but like you said, like mostly the number of trades is probably what you're looking
because the ones that used to be on my scanner with the higher amount of trades, I used to have a good scanner even back 2019 and pre. Now sometimes nothing pops up on my scanner because I need liquidity to trade.
Of course. And so how are you changing? Like, how are you yourself adapting? What are you facing? Because you've been trading for quite some time, full time. So like, when did you start to notice this? And like, what did you immediately start doing to shift? Like, can you give us an experience on what you've been doing?
Yeah, so 22 is when it really changed compared to the previous years. So I didn't really know what to do because I have one exit that works the best for me because of years of tracking. That exit wasn't working in 22. So I started to look for other exits, and I found other exits that actually, one in particular that actually made more money, and it was more of an equity curve like this, where my exit was kind of like, first of all, it started in a drawdown, and then it was kind of like this. It was kind of, and then it would do this. It was just very choppy.
Yep.
So the consistency wasn't there, and it didn't make as much as the other exit I found. But then in 23, that changed. My exit worked better than the others. But one thing that I thought of, which I haven't done yet, one thing that I've noticed in the OTCs is, I think we talked about this, I'm pretty sure we've talked about this before, but because of my exit being the previous day's close, because I just like to be out if it's going red on the day.
Yep.
A lot of stocks in OTCs now breach it all the time. It wasn't like that. When there's momentum, there's enough buying, it won't breach that. And even the promoters will hold it up, but it breaches it all the time. So what I'm considering doing is not changing the exit that I use. I'll keep that the same, but actually adding additional risk and using something like maybe low of day on the stock, like I might use on a listed stock, right? Because listed stocks breach, they go green to red all the time.
All the time.
And then they go up.
Yep.
So I've been stopped out of so many stocks, especially this year, that I think that's what I'm going to do. I'm going to add a little bit more risk, and then I'm going to use that stop that way. And that way, at least if I'm staying in some, then I have a smooth equity curve that way, but also be bringing in money that I didn't have before. Then I'll have to come to a determination, do I make it more like a 50-50 or, how do I deal with this?
What do you mean?
Good question. So do I continue with just a little risk on this new stop or this new way of exiting and keep my old way because that's proven over the years to be the best?
Right.
At least to 2015 is when I have the data. Or do I start adding more size into the new type of exit? So it's kind of like a balancing act and trying to figure out. I don't like to have to do that.
Yeah.
But what if, because of the regulations and because it's such a dramatic change, the OTCs are changed forever? I don't know.
When you say 2015, you said you started collecting since 2015, or you mean you stopped at 2015?
Yeah, 2015 is when I have data for tracking my exits.
Oh, gotcha.
Yeah, that's as far back.
As far back.
I don't have it before that.
When you're tracking exits. Okay, gotcha.
Yeah,
gotcha,
because
gotcha.
it didn't dawn on me actually until 2018, and I went 3 years back. So now I have 2015.
Been going forward,
yeah.
Which is pretty cool. We'll talk about that, tracking your exits, because I actually started doing more experimentation with different setups where I'm like tracking different exits now.
That's
because it's something you shared with me one day, and I was just like, maybe I'll just try all these different exits. Now, it sounds kind of obvious, kind of in a way when I say it, but
right.
like at the end of the day, like you get stuck on one setup, and you're like, okay, this is how the setup works, this is how it should work, and you kind of get stuck. But then when you hear someone else who says, I'm going to try different exits on this one setup and try all these experimentations, it kind of opens your mind up. Hey, we wouldn't be able to do these face-to-face interviews if it wasn't for our sponsor, Cobra Trading. So if you could just give them a few seconds of your time, we'd really appreciate it. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show. What made you think of that?
It was actually a really good friend of mine that I was working with him, doing a system with him. Basically, he told me the exits to exit, and I would just execute the exits. And then after doing it for probably, I don't know, maybe a couple of years, it dawned on me, what if I did this with my, I never thought about it. Like I knew I had a few different exits, and I thought, what if I did this with mine? And that's when I started to go back in 2018. I started current and went back each year, and I was blown away that, in fact, every exit that I tracked, so there were 4 exits, every single exit beat my numbers, which told me right away that whatever exit I picked and stuck with it consistently would beat what I was doing. Why? Because sometimes maybe I'll get out at the open if it's a big gap, and then that one runs really hard if I kept a swing exit, or vice versa. Oh, well, then now, I got, maybe I'll say, well, I'm going to change it, and then I'm going to do the swing, or vice versa. And then you get into this all psychological mess. You follow? And then you're just doing all different exits.
Yep.
But that was probably a game changer. It was a game changer for me, because I realized how important it is to have a consistent exit, whatever that exit is. And the only way to find out what works best for you is to track it.
That's a good point, because a lot of us are so heavy on understanding your setup for the entry. Really heavy on that. Like, I know exactly where to enter, why I'm going to enter. It's because this happened, and this is my trigger. So I'm getting in. And then the exit, a lot of people are probably like, oh, I'm just going to take some off here, take some off here, take some off here, and just keep riding it.
Exactly.
And they don't really have a system in place.
Exactly.
So I'm glad you shared that, because you just showed that even though you were already profitable, you could be much more profitable if you had that type of exit.
Yep. And you're not changing your risk. You're not changing the number of trades. You're not changing anything, really.
And you're just increasing your...
That's right.
That's insane.
Yeah.
And that's what's cool about trading too, Jay. Like, there's so many ways to increase your trading without changing the actual setup.
Yes. And without even changing your risk. Because we know if we're profitable, we increase our risk.
Yep.
Right? Or we increase the number of trades. The number of trades is hard because it depends on the market. Are those number of trades available? Increasing the risk, now you have more size on. But if you find an exit that works better, you're just doing, all those things are the same.
Yep.
It's just you're changing the way that you exit.
So we kind of got off on a tangent there, so I'm going to bring us back. I'm curious on how have you mentally adapted to this recent past couple of years? Because I know you and I talk on a regular basis, and so I have the privilege to know like the backstory. And if you guys don't know, he shared his whole story on previous episode. We'll share a link below. But things have changed for you. Like you were killing it. You had some killer years, being very consistent, and then things just kind of dried up. How are you dealing with that? How are you managing? Because I know there's traders out there who might be facing something similar, and they might not know what to do, or where should they start, or maybe they're even thinking that this could happen to them. You know what I'm saying? So like, I'm very curious on how you're adapting to that in that aspect.
So basically in 22, I tried to adapt with finding a different exit.
Yep.
In 23, I found that my original exit worked the best. But there are things that I normally do in markets like this. I start to get a little bit more selective, even though I still need to take a trade if I like it. I don't want to not take that trade. But I will be more selective. But I'll also, like, one thing that I just started doing is, which I shouldn't be doing, but it's boring. I'm sitting, and I only trade the last 90 minutes, so it's only 90 minutes. However, I could sit there for 90 minutes and be falling asleep because there's nothing on the scanner. So what am I going to do? I start to look at stocks I shouldn't be looking at. I start to look at, well, what's the less liquidity stocks doing in the OTC market? And then, maybe I'll find something there. Maybe I'll find a new thing or new, whatever it is. So recently I decided, it was just a few days ago actually, I just took that all off of scans. So all I have now is my original scanners. So all I'm doing is waiting. And in the meantime, I'm doing other stuff. Like maybe I'll be doing a little extra tracking, or maybe I'll be tweaking something in between TraderView and Excel with tracking. But I'll keep my mind focused on not trying to look for something that I shouldn't be looking for. Because here's what happens. I'll find something if I look in the stocks that have less liquidity that I shouldn't be trading, and then I'll say, wow, look at that move. What if I was looking and I saw this and I could have made money? So then what do? I'll go and break my rules and take the trade, and nine times out of 10, it's a losing trade.
Isn't that such a
And then it's like, so okay, I did something I wasn't supposed to be doing. I lost money. I deserve it, but now it's psychologically damaging. So that's almost worse than losing the money.
That's huge right there, because the whole idea of, you go out looking for something, you're going to find it, and then you're going to give yourself FOMO, and then you're going to just go down the wrong rabbit hole. And then if you do get your psychological damage, you might miss your actual trade.
That's right. On top of it.
And that makes it worse.
That's right. And it's very hard psychologically, because even though, like for one example, for me, I don't trade sub-penny stocks.
Yep.
That I know hands down. Anything under a penny, I won't trade. Why? Because I have an equity curve that goes like this. It goes the opposite direction you want it to go. And probably over the last 4 years, maybe 5 years, I've lost probably, I think it's about $45,000 in 5 years. So it's like,
why would I even do that again?
Right. Why did I lose that many years? Because there were those times where I said, well, let me look. And so I've gotten to the point where I say, no, this doesn't make any sense.
Yes.
Here's the data. I know it's going to, and even if I take one and I win, it doesn't matter, because the equity curve says that in the long run, I'm going to lose. What's the point?
Thank you for sharing that, Jay, because a lot of people that are just not very vulnerable and they don't want to be open and share the reality of trading that you just said, because I know that you're a good trader. I know you've been consistent. And what's crazy is like you just said that, like, it took me, basically what you said, it took me a while to figure out that I wasn't going to trade this anymore ever again. I did lose some money doing it, and that's okay. Like, and I love it you said that, like, because it just shows the reality of trading. Like, you got to tinker, you got to try things, and it's good to do it with paper, sure, and tracking on Excel, which we both do. I know we talk about that, but sometimes we want to trade it. I'm gonna be honest. Sometimes you want to trade it, and you manage your risk well, right? And that's what's important. Because if that 45 would have took you out of the game, then that's managing the risk poorly on something you have no idea if it's going to work.
That's
right. So always pay attention to that. Like, don't worry about the number per se. Just understand, like, if you're going to take risk like that and try something new, and you shouldn't be, manage that risk so that way you don't lose your account.
Good point.
Getting back to what you were saying earlier, one thing I wanted to ask you is, when it comes to that decision of, I'm no longer going to tinker, I'm not going to go mess around with these other strategies, I'm just going to look for mine only and sit there and wait and be patient. When does it come to a point where you're like, you know what, I have to look for something else, or it's time to look for something else? Because that has to be a delicate balance, right? So could you share some light on that?
Yeah, that is such a great question, because that's going to be different for everybody. So I know, for me, about all I can handle psychologically is probably a year's worth of time. If a year's worth of time, sort of like what happened in 22, because 22 I basically broke even. I was positive just by a little. 23 made up for the year before.
Yep.
So it balanced out. So I made enough to cover both years.
Yep.
Right. If I went 23 and it was like 22, that probably would have been the time where I'd say, okay, either this is not working anymore.
Yeah.
And maybe I'm going to experiment with the listed stocks, or maybe I'm just going to leave the business.
Yep.
Because I've been doing OTCs for 20 years. Can I even trade listed stocks? It's completely different. Do I want to go through that learning curve?
Right. Because you respect that everything is a brand new.
Very different.
Brand new.
Yep. Everything is yep. So I got that going on. So for me, I think probably, I said 1 year at first, and now I'm talking 2 years. But I say it because the second year was fairly consistent. So
Right.
I didn't. So really, it only lasted a year.
Yeah, and
But if
even truth be told, if I remember correctly, that year that it did happen, that if you would have hit everything perfectly like you're supposed to, because you got kind of chopped up a little bit because it was rocky year in terms of like the amount of opportunities, right? And so if you would have executed everything perfectly, that it would have been a good year. So like
that's right.
that was
Thank
my
you.
next question, because like this year, you got to make sure you do everything. Otherwise, you got to give yourself. Yeah, it's one of those challenging things with trading, you know.
Thank you for reminding me. This is why it's helpful to talk to other people about what you're doing.
Yeah.
Yes, because that's true. If
Yeah.
I did what I was supposed to do in 22, and I didn't because it was choppy, it was a market I've never seen before. Not an excuse,
Yeah.
but that's why I did what I did.
Yep.
Yeah, if I did what I was supposed to do, I almost would have made enough to pay my bills.
Yep.
But because I, started messing around, not doing the right thing, that's what happened.
Yep.
So yeah, that's a really good point. So 23, I did say, or I'm sorry, this year 24, I'm sticking to what I did in 23
Yep.
because it worked. And it's interesting because in 23, probably 30% of my profits were made in December. So you could be sitting, I don't know, like it could be any time.
Yep.
But the fact that I kept doing what I was supposed to doing what I was supposed to do, eventually, for me, it works out. And it's kind of interesting but there's psychology involved. Like I've taken the same stock, I was telling you earlier, for probably 8 times in the last couple of weeks, and every single time I lost.
Yep.
Every time. But I'm not going to not take it because it's what I like
Yep.
when I see it. So I still have to take it.
Yep. And you know what's cool about your strategy? Because I know this, and you guys have to listen to Jay's other interview, but your strategy, that is your strategy. Like, you make the most of your money on a very few select trades that make your years. And not only do you do that, but because I have the privilege of talking to a lot of traders, like almost all the traders I talk to, they make their year in like a handful of trades or 1 month or 1 week, or one trade. Some people, it's rare, but some people, and that's something that's interesting because can you talk about how you're able to take so many losses and just be totally fine and keep pulling the trigger? Because so many people have just heard you say, I just took 8 losses on the same ticker. I'm taking it again no matter what because it's my setup. Like, people are hearing you say that and they're probably like thinking, and they're not probably traders, but they're probably thinking like, why would you keep taking it? That makes no sense. Like, you lost, bro. Why would you keep taking it? But that's what.
Yeah, it's basically because of the tracking, because I know I have all the data.
Yep.
And I think Mark Douglas said this, every trade is unique. So I don't know what it's going to do. And just because I lost 8 times in the same one doesn't mean on the 9th one I take it, I'm going to lose.
Sounds funny.
But our mind, right? But our mind associates.
Yeah.
So it wants to think we're going to lose.
Yep. It's a pattern.
But I don't know.
Yep.
Yeah, because every trade is unique.
Was that difficult for you to accomplish, to be able to keep on going?
In the past, or
I mean, yes,
just overall
in the
to
past,
get to this
overall
point?
to get to this point, yeah.
Yeah, the way I got to this point, I think that might be what you're asking. The way I got to this point is Mark Douglas. Just listening to him over and over and over. I only read Trading in the Zone once, but all his YouTube videos I've listened to so many hours over and over and over.
Everybody's like, Mark Douglas.
Over and over and over, because it just starts to become part of you, and that's what you need. Especially in the market where things are going crazy, emotions are going crazy, you need to know what you're doing psychologically.
100%. Because you can have a good setup, a good strategy, but if you can't execute it well, because you're messed up here, you're never going to make any money.
Yeah.
Period. And I remember, and it's frustrating for me. I remember when I was like, knew my setup and I knew what to trade, but I couldn't make any money. But I knew I could at the same time. That is where a lot of traders are at.
Yes.
They're like, how do I get to here where they're both, in equilibrium and you're like focused and you're in the zone? How would you suggest this? And you said Mark Douglas is one. Would there be another suggestion on what traders can do to get to that point where they can just, kind of be more stoic-like and just keep pushing?
It's a good question. I'm not sure. Because I default to Mark Douglas, I think so much of this game because it's psychology, you have to think like, I'm not doing this. Okay, I guess you have to figure out why you're doing it in the first place. That's a good way to look at it, because we all get out of the market what we want. So if you're looking for excitement, you're going to get your excitement. Doesn't mean you're going to make money.
Yeah.
So you have to kind of know where you are. Yeah, you have to know where you are psychologically, and if you can get to a place, however you need to get to it, that this trade is only one of a sample of trades. So, and I think Mark Douglas talks about 20 trade sample size. That's a good way to track too. But it's just one. I think the problem is a lot of people get so excited and they want to make money, so they wake up in the morning and they're just looking and taking whatever's running and whatever's in play, and they just kind of just go all over the place. And I think if you track, I think that's probably the best way to do it. I tell this to every person that has ever wanted to learn anything about trading from me. I send them one to Read Trading the Zone, watch all Mark Douglas YouTube, and then I set them up with a tracking sheet. Like actually give them like a template, because I have one to give them, and say, first go back to all your exits, track it, and let's talk after you do that. Because then at least you have that information, and once you have that information, that will help you do the right thing.
Yeah, it'll definitely help you figure out, like, do you have a successful strategy or not?
Yeah.
Should you change anything?
Yeah, and you know what? You may find you're losing money, and then you track exits, and then you find out, well, if I just did all the exits this way, now all of a sudden I'm a profitable trader.
100%.
Yeah.
And on that note, because I know Jay, people are going to want to ask questions, and they're going to be like, how do I get that template? So I'm going to reach out to Jay. How can they learn more about you?
On Twitter at C8OTC Trader. I think that's probably the best. Or it's the same thing with Outlook. At Outlook, if you want to do it.
At Outlook. Please do not use Outlook anymore.
I'm really old school because I have them all in my Outlook. Yeah.
Okay, well, look, we'll provide your Twitter down below. And again, Jay, thanks, man.
Yeah,
thanks
man.
for being on the show,
Thank you.